let's talk about one paint stock that's done quite well so far this year also over the last 24 months. And I'm referring to Akzo Nobel. Stocks up about 25% in the current calendar year. And the company did quite well in the first quarter as well. The performance was healthy as the company saw a big jump in margins, 400 basis points jump in gross margins. Profit was up about 43%. So raw material inflation cooling off has been a big tailwind for a lot of paint companies, including Akzo Nobel. The question is, what next? And how is demand looking as we get into the peak of the festive season? Rajiv Rajagopal, Managing Director at Akzo Nobel, is joining in. Rajiv, thank you very much for being with us. You know, I want to start by taking the discussion to actually decorative, because though I know industrial is a huge part of your portfolio, but let's start with decorative, because I think the discussion on raw material we can keep aside for the time being with crude behaving itself. The question is what's happening with revenue growth, market share, and with so many new players and big, large, deep-pocketed players entering the market. The question is there going to be a big battle for market share, maybe competitive intensity, pricing competition? What do you see in the market today, and what do you forecast for the next 6 months to 1 year?
Morning to you, to Prashant, Sonia, and all the CNBC TV 18 viewers. Thanks for having me on your show. So firstly, with regard to the last quarter, we saw a bit of a growth which was slightly different from what we've seen in the earlier quarters. We saw higher growths coming in from our tier 2, tier 3, tier 4 towns, in fact, high double digit. And in fact, we saw a bit of a muted growth in where we typically have been very strong, which is the large towns and tier 1 towns, right? That's slightly changing. And I'm talking about decorative paints, and we grew, in my view, we held market share. We were sort of, if you look at the last fiscal, we actually added significant market share, and we've been adding market share in the last couple of years after many years, if you really plot the trend of Akzo Nobel stroke ICI. Yeah, so that's healthy, and our intent is to sort of move it there. Coming to your specific question and how the demand is, look, July was a bit tough. Impacted mainly by the monsoons, excess monsoons, but we do see a slow recovery. I think the recovery will be sharper in the 2 months before the festive typically, because this time Diwali is, in the second week of November. So we expect strong September, October. That said, I think we've just got to be a little careful because there are certain nuances in specific markets that we are sort of addressing as a team. But we've got our aggressive plans in place, our advertising is in place, our propositions and new launches are in place. Just to give you an example, we've launched now Dulux Assurance, what we call 2.0, where we've introduced a warranty program. So if any of you are planning to paint your home, you're also covered by a warranty, a specific warranty, and we've sort of launched that. And perhaps it's an endeavor, it's a promise of our quality, which we are very confident about. That's what really Dulux really stands for.
Sure.
Going forward from a fiscal perspective, look, we are still targeting double-digit growth. Yeah, I know the start has been a little slow. Maybe this quarter will also not be really, double-digit, but I do see that, I think our plans are in place, etc. Coming to your question on new players.
So, Rajiv, just before you answer the new player bit, you mentioned you've been gaining market share. Can you give us a number? You mentioned last time that you were at 5.5% to 6%. I just want to understand what's the latest number.
See, we had dropped to about 4.7 about 2 years ago, and we moved to almost about 5.5, 5.7 right now, trending towards 6, I would say. Remember that we are not a very big player in the putty, and in the decorative part, we look at with putty, without putty, and also some of the, we are playing in the addressable segments of the decorative. Sure. For example, we don't participate in lighting, furniture, and etc. So when you look at the addressable market, we would be sort of gaining significantly in the last quarter. And except, of course, as I said, last quarter, we would be, I would say, flattish. When you look at it, we've held share, we've not lost it. And we've sort of put some plans through distribution, accessing smaller towns, getting new customers into the portfolio, etc., as ways to drive market share.
Sure. Rajiv, good morning. This is Sonia here. So, it's very interesting you say that July was under pressure because of the monsoon situation. You're not alone in that regard. Every other paint company that we've spoken to has said that consumption has been lackluster. But now in August, there has been relatively not much monsoon. So how was the performance in August? Have you continued to see low single-digit growth? And given the kind of competition as well, combined with a slowdown in consumption, do you think you would have to sacrifice on your margins over the next couple of quarters?
So Sonia, look, we don't give a monthly sort of guidance in terms of it, but how's August going? Yeah, it's better than July, but not still where we would like it to be. But having said that, as I told you, we are certain that by September things will sort of bounce back in majority of the states where we seem to be getting a better traction. But still, I would say not in line with what we want. From a quarter perspective, we are still hopeful. In terms of getting towards the number. But again, as I said, I see sharper recovery in the next quarter. Primarily because that's just before the Diwali season, and we see a huge. If you look at some of the sort of demand that's sort of coming across, not just in the retail side of the business, but also on the project side, seems to be fairly strong.
Sure. No, on the margin front, I was checking with you, and the reason I ask is because I understand that your ad spends as a percentage of sales is going to go up. So in that context, where ad spends are going up, competitive pressure is rising, and consumption is not that great. How much would you have to, sacrifice on margins?
So look, we've been at an EBIT margin of closer to about 13-14%. This is including the royalty we pay, and that's obviously we would be number 2 actually when you look at EBIT margins. Yeah, I think we are fine to sort of look at holding margins at this point of time. And so what's going to come accretive because of further raw material drops, we want to sort of make sure we are investing behind the business. Now, we need to wait and watch in terms of the some of the new players in terms of pricing. It's still early days, Sonia. A couple of players who've launched, say, 2-3 years ago, other than one player, I don't see too much of traction really. So really too early for us to comment in terms of really matching it. Yes, the discounts on the retail, on the decorative side of the business have slightly shot up. That's primarily because of the price increases we had taken earlier, and we've not sort of followed it with price drops because the crude is still very volatile, Sonia, and you are covering it well, right? It is one day it's 82 and the other day it sort of gets close to 90, and so is currency. So it's difficult for us to take a price correction, but we do hope to hold margins. That's been the endeavor that we are in.
Okay. Rajiv, the other point about distribution, right? You said you were into smaller towns and sort of getting new customers. You said you plan to expand distribution to between 30 to 35,000 dealers. By when and what kind of expenditure will you incur on this?
So, Prashant, we are going to sort of, good morning. We are going to look at a 3-year time frame, right? So, if you look at, we've now started covering almost 5,200 towns. We are now planning to take it over the next 3 years to 8,000. We are pretty much trending on it. Right. In terms of expenditure, not much, because we've already got a distributor model, as you know, in place over the last 6 years, and almost 70% of our turnover of the decorative business goes through. It's a very steady model. We are doing well, perhaps one of the only players in the business which is driving it. And what we are doing is what we call hub and spoke, where we are building on our distributor model to access smaller towns, right? So the break-even is less than 6 months. So really, from an incremental cost perspective, it's not really going to be a significant cost addition, Prashant, if I've answered your question.
Okay, you have, I had more, but another time. We're kind of running out a little time. Thank you very much. And I'm sure that warranty guarantee, there are different rates for customers with kids and without kids, right? So higher rates for customers.
Look,
just joking.
Look, but on a serious note, I think it's a fantastic product. I encourage all of you to buy at home. People who've used it, swear by the product. That's the biggest difference. I think our Solus users, if you look at, we 98% of Solus users use us back in 3 to 4 years, right? So, that's volumes of the brand.
Done. We'll check it out, Rajiv. Thank you so much for joining us. It's a pleasure as always, and good luck. A good conversation as always. So
I actually need a paint job, at home. I was just thinking about it.
So
but with young kids at home, it's I think maybe once in 10 years.
Two new customers right there, Rajiv. Thank you very much for joining us.
Thank you.
We'll take a very quick. Thank you. Thanks very much. We'll take a